Hello guys, welcome back to another video. In this video we are going to discuss about journal entries. Journal entries are very fundamental for accounting. It is the entry point of recording transactions in the books of accounts. We all know that first transactions are recorded in journal, then they are posted to ledger, that is what called classifying, and then we prepare our financial statements. So journal entries are very important because without knowing journal entries, it is difficult to record a transaction. Okay, without wasting time, let's move on to how to pass a journal entry. Okay, to understand journal entries, the first thing that you need to know is categories of accounts and their general balance. Categories of accounts, nothing but in accounts we record so many things, like we record a person, debtor, creditor, we record expenses like rent, wages, salaries, and we also record assets, land, building. So all these things are called as accounts, and each and every account belongs to either of these four category. So for example, land, building, machinery, furniture, all those belongs to assets. Of course, assets are tangible, intangible, even goodwill, trademark, they are also assets. Liabilities, the money that we owe to others, like capital, loan, so all those are liability. Then the next category, expenses, losses, which covers all the expenses and losses, rent, tax, salary, commission, all those things are covered under this category. Then the remaining one is revenues and gain. All the incomes, all the gains comes under this category. So the most important thing is that their general balance, what is normal balance of this category. Assets are generally debit in balance, and expenses and losses are also generally debit in balance. These two are debit balance accounts. And liabilities, revenues and gains, these two are credit in balance. So this general balance is what very important to pass journal entry. To apply rule of journal entry, this is what very important. You need to keep in mind the general balances of each category. Okay. Okay, the next thing that you need to learn is the rule of increase and decrease. An account, either it will increase in our book or decrease in our book. So these two are the rules to increase or decrease an account. To increase an account, go for the same effect. Same effect means if the general balance of the account is debit, then you also have to debit it. If the general balance of the account is credit, you also have to credit it. To decrease an account, opposite effect. If the general balance of the account is debit, then you have to credit the account, and if the general balance of the account is credit, you have to debit the account. For example, you are buying land. Land is an asset. Asset increases. The general balance of any asset is debit. To increase that particular account, you also have to debit it. Same effect. Clear? Then another example, you are taking a loan from bank. Loan is a liability, general balance is credit. So your liability increases. To increase, to record a loan, you have to credit that account, loan account. That is because loan, general balance, credit. To record that, you also have to credit it. It is like a number. To increase a positive number, we have to add it. To increase a negative number, we have to subtract it. Similarly, opposite effect, a debit account has to be credited. For example, you pay cash and you bought loan, so your cash decreases. Cash is an asset. The general balance of any asset is debit. To decrease any debit account, go for opposite effect, credit. And similarly, while paying off the loan, liability decreases. The general balance of any liability is credit. To decrease the liability, we have to go for opposite effect, that is debit the liability account, the loan account. So these two things you have to match with the categories of accounts and their general balance. Kindly take a screenshot of this. Okay, let's pass journal entry for this transaction, furniture purchased for cash. We all know that in double entry bookkeeping system, each transaction has two effect. It affects minimum one account. Each effect affects minimum one account, which means two effects affect minimum two accounts. In this transaction, we purchase furniture, so we have to record in our total furniture that new furniture is added, and we also have to record that we purchased the furniture for cash. So out of the cash in hand, some of the cash has reduced, so we have to decrease that particular cash account. So the accounts affected in this transaction are furniture account. Since we purchase furniture, we get this asset and we pay cash. The very first stage is to find out what are the affected accounts in this transaction. After that, find out their category, and both belong to assets category. And we all know that the general balance of any asset is debit. So this is a rough work. Here I am doing a rough work for journal entry. Now what happens to these two accounts? Now we have to see whether that particular account value increases or decreases. Now we are purchasing a furniture value increases, and here cash we pay, so cash decreases. Now based on this, apply the rule of increase and decrease. Since it is this particular account increases, apply the rule of increase. To increase an account, same effect. It is a debit balance account, so we also have to debit it. So the final answer is this particular account has to be debited in journal. Then here cash decreases, so we have to apply the rule of decrease, which says opposite effect, which means we have to go for opposite effect of the general balance. General balance is debit, so we have to credit this account. Rough work over. Now debit account has to be written first. Furniture account debit to cash. After that, leave a small space and write the credit account. Credit account has to be written at last. Okay, whatever value is. We have to write here a narration. This is a transaction. Furniture purchased for cash. Let me explain you with the help of another example. Started business with the cash. So the first step is we have to find out the two accounts affected by the two effects of the transaction. Here owner starts a business and he invests cash in the business. So the one account affected is business receives cash from the owner. So that is the first account affected, cash account. The money so given by the owner is called the capital. That is the second account affected. Cash, we already know that it belongs to the category asset. So that is the second step. First step, find out the two accounts affected. Next step, find out their category. Cash belongs to the category asset, and capital belongs to the category liability. This is because of one principle called business entity principle or accounting entity principle, which says that owner and business are two different entities, two different persons. All the transaction has to be recorded from the point of view of business, not from the point of view of owner. So from the point of view of business, money invested by the owner, that is money given by the owner, is a liability for the business. Business owes that money to the owner. So according to that principle, capital is a liability. The next thing that we need to find out is their general balance. Assets general balance is debit and the liabilities general balance is credit, because based on this we are going to apply the rule of increase and decrease. The next thing is read the transaction and find out whether these two accounts increases or decreases. So business receives cash from the owner, so business cash increases, and the money invested by the owner is called capital. Capital is a liability. Now the business liability also increases. It is not that one account has to increase, one account has to decrease. Sometimes one will increase, one will decrease, sometimes both will increase, both will decrease. Since both increases, apply the rule of increase. To increase, same effect. This is a debit account, we have to debit. And this one is a credit account, we have to credit. That's it. The final answer, make sure that there should be at least one debit and at least one credit out of the accounts affected, and total value of debits should be equal to the total value of credit. So now the journal entry is write the debit account first, then in next line write the credit account. Narration, you just rewrite the transaction. That's it. This is what a final journal entry. Cash account debited and capital account credited, and narration, started business with the cash. Let me summarize you the steps involved in the process of journalizing. The first step is that find out the affected accounts of the transactions. There are two effects, and both the effects affect minimum one account each. So there will be minimum two accounts in the transaction, and there may be more than two accounts, and they are called as a compound entry or combined entry, which we will discuss later. Next step is that find out their categories of accounts and the general balance. Here you find out two accounts, and those two accounts belongs to either of the four categories. Find out which category these two accounts belong and their general balance. Assets and expenses losses debit balance, liabilities and revenues and gains credit balance. And then read the transaction, find out whether they increase or decrease, that is whether these accounts increase or decrease. This is decided by the transaction. You need to find out based on the transaction only whether that particular account increases or decreases. After finding out whether these accounts increase or decrease, apply the rule of increase and decrease. Increase means same effect, decrease means opposite effect. That means general balance is debit, you also have to debit. General balance is credit, then you also have to credit. That is what rule of increase says. Then rule of decrease says general balance is debit, opposite effect credit, we have to credit that account. General balance is credit, then we have to debit that account. That is what rule of decrease. Then based on the final answer, pass journal entry and write the narration. That's it. That's what journal entry. Okay guys, thank you so much for watching. If you have any doubt, please let me know your doubts in the comment section. I will surely reply back to you. And if you want me to teach particular topic, you can put them also in the comment section. I will make a separate video for you. If you have enjoyed the video, please like, share and subscribe. Thank you.